Global financial markets faced a sharp jolt this week after former U.S. President Donald Trump declared that, if re-elected, he would impose a 100% tariff on all Chinese imports, sparking widespread investor anxiety and a sell-off across key asset classes. The announcement came during a campaign rally where Trump doubled down on his long-standing stance against Beijing, accusing China of economic warfare and pledging to bring back manufacturing jobs to the United States. The immediate reaction was swift and negative. U.S. stock indexes tumbled, with the S&P 500 falling more than 2% in early trading, the Dow Jones Industrial Average dropping nearly 700 points, and the Nasdaq Composite sliding sharply as tech and manufacturing shares bore the brunt of investor fears. The U.S. dollar also weakened against major currencies, reversing a recent rally as traders sought safer assets amid growing concerns about potential trade disruptions and inflationary pressures. Analysts say the market reaction reflects renewed fears of a full-blown U.S. China trade war, similar to the tensions seen during Trump's previous term. A 100% tariff would effectively double the cost of Chinese goods entering the U.S., impacting a wide range of products, from electronics and machinery to consumer goods like clothing and furniture. Economists warn that such a move could reignite global supply chain instability, increase costs for American consumers, and strain diplomatic relations between the world's two largest economies. The Chinese government has yet to issue an official response, but state media outlets in Beijing denounced Trump's remarks as reckless populism, designed to stir nationalist sentiment ahead of the 2026 elections. Market observers expect China could retaliate with tariffs on U.S. agricultural and technology exports if the proposal materializes, potentially reigniting a cycle of trade retaliation. Meanwhile, investors shifted toward traditional safe havens such as gold, which rose 1.5% to trade above $2,400 an ounce. Treasury yields also declined as traders sought stability in government bonds. The foreign exchange market reflected heightened volatility, with the yen and Swiss franc strengthening against the dollar as risk appetite waned. Wall Street strategists say the volatility is likely to persist in the coming weeks as markets digest the political implications of Trump's remarks. A 100% tariff on Chinese goods is not just an economic measure. It's a geopolitical earthquake, said one senior analyst at J.P. Morgan. If implemented, it would trigger a global repricing of assets, disrupt trade flows, and force central banks to reconsider inflation forecasts. For now, the Federal Reserve faces an even more complicated outlook. Inflation, which had been gradually cooling, could resurge if tariffs significantly increase import prices. That would limit the Fed's room to cut interest rates, dampening economic growth prospects in 2026. Businesses dependent on Chinese suppliers are already voicing alarm, warning that steep tariffs would raise production costs and consumer prices at home. Despite the sell-off, some investors see the turbulence as temporary, expecting political rhetoric to soften as the election approaches. However, others warn that Trump's consistent focus on China as a strategic adversary means tariffs are likely to remain a cornerstone of his trade policy agenda. As uncertainty deepens, global markets are bracing for potential aftershocks. The dollar's fall, tumbling stocks, and rallying gold all signal one thing: investors are preparing for a stormy ride ahead if Trump's 100% tariff threat becomes a policy reality.